Strata fees. Are they normal or are you getting ripped off? I get this question all the time in Vancouver. These fees seem so high. And I get it. The real estate here is already really expensive. So when you're tacking on another $300, $800, and sometimes $1,200 a month, you want to know where that money's going and whether it makes sense or not. The reality is that there isn't just one standard number. Strata fees can vary from building to building. But once you understand the key factors that drive them, you'll understand what's normal, what's not, and what to look out for. Before we get into what makes strata fees higher or lower, let's quickly cover what strata fees are for. Most of your strata fee goes towards the annual operation of the building. Things like cleaning, landscaping, garbage removal, utilities for common areas, property management, minor repairs, and day-to-day maintenance. The other portion goes into the building's contingency fund. That's essentially a savings account set aside for bigger, less frequent projects. Things like roof replacements, window upgrades, repiping projects, or elevators. So every dollar you pay goes towards keeping the building running smoothly and preparing for the big ticket items that will inevitably happen in the future. If you want me to help you break down your strata fees and figure out if they're high or low or right on target, drop a comment, DM me, or shoot me an email at cole@thevancouverlife.com. I'd be happy to help out. Now, let's go over the main factors that actually influence how much you pay. The first factor that impacts your strata fees is unit entitlement. That's just a fancy way of saying the bigger your unit is, the bigger your share of the building's expenses are. So, in most cases, a 2-bedroom will have higher strata fees than a 1-bedroom in the same complex. But remember, it's all relative to the other units in the complex itself. Next is age of the building. Older buildings typically cost more to maintain. They've got aging system, parts that are harder to replace, and they have more wear and tear. Sometimes, strata councils will try and raise strata fees proactively to grow the contingency fund, to avoid one-time special levies for massive projects. A special levy is when all of the owners have to come together and chip in for a big repair. And trust me, no one likes getting that notice because most of the time special levies are paid in a lump sum. Then we've got amenities. Pools, hot tubs, gym, saunas, steam room. They sound amazing, and they are. But every one of those features comes with a maintenance cost. And as those get older, the costs go up as well. So while it feels great to brag about that nice pool that you have in your building, just remember, part of your strata fee is going towards keeping it running. Another big factor is insurance. If a building has a history of leaks, structural issues, or constant claims, then insurer will hike up the insurance premiums. When that happens, owners often vote to raise strata fees to help cover that cost. We saw this happen a lot in BC in 2020 and 2021, when insurance companies jacked premiums basically overnight. Now, here's one that people don't always think about when it comes to strata fees. Location. Where the building is actually matters. In dense urban areas like downtown Vancouver, strata fees can trend higher simply because the cost of service is higher. Think about it. Trades, contractors, waste removal, even insurance all come at a premium in major city versus a small community. So, 2 buildings of the same age, size, and with the same amenities might have different strata fees purely based on where they're located. And finally, the total number of units in the building matters as well. More units means more owners to help share the expenses. So if a bigger building has a bunch of units and not a lot of amenities, this can actually help lower the fees. In contrast, a small building with only a handful of units can have higher fees because they have less people to split the cost with. That being said, smaller buildings tend to have less maintenance costs than bigger ones. So, with all that in mind, it's really tough to judge strata fees at their face value. A smaller unit in an older building with a pool and a hot tub might have higher fees than a bigger unit in a newer building with less amenities. Or a large unit in an older building might actually have lower fees than a small unit in a new building with high insurance costs and tons of amenities. And then you layer in location and you start to see why there's no simple answer to what's normal when it comes to strata fees.